when we talk about liquidity, why are we interested in the liquidity on the exchanges? Generally, why we talk about liquidity, and when my friend Rashid talked about the liquidity on the generally on worldwide dropped by 20% or 25%. In the Arab region dropped by much more than this. What do we mean by liquidity on an exchange? Anyone knows? Yes, what's liquidity on the on any exchange? More money flow. Why we are interested to have more money flows? Why the liquidity is important on any market? Just because. You came here in this room through this door. You are happy to be here. If it's hot, you might go outside. If you are thirsty, you might go outside. You come back. You go walking a bit, and then you come back. But if I tell you, after getting in this room, that this door will be closed for 4 hours, you will not be able to go out. Next time you will step inside this room, you will think twice. Should I get inside? Or maybe no. Same thing for the exchanges. If you don't have enough liquidity, you buy. Having liquidity means if I want to buy 1 million with $1 million shares. Okay, I've bought them. But when I want to sell, to exit from this market, I want my money to leave and to buy an apartment with. If I don't have enough buyers, enough offers and demand on this market, I will not find a buyer to buy my shares. So then I don't have enough liquidity, I don't have enough demand to sell my shares and to be free to exit at any time I want. This is the liquidity. The liquidity, the more we have liquidity, the more we have demand and offers on the market, the more we have transactions on the market, the more we will feel free to get in the market, in this room, because we are sure that we can get out and exit anytime we want. This is why, and this is what gives an advantage from one market to another, the liquidity. Okay, let's go back to the reasons behind the lack of liquidity on the Arab markets. Again, I will not get into the details in a rude way. We'll try to make it more fun. First of all, who is the Arab Federation of Exchanges? The Arab Federation of Exchanges represents 18 Arab exchanges going from Saudi Arabia to Dubai, Abu Dhabi, Qatar, Kuwait, Bahrain, Egypt, Morocco, Tunisia, Lebanon, Jordan, Iraq, and 18 exchanges and 4 clearing houses. It represents really a big part of the financial sector in the Arab world. But we represent recently also 34 investment banks. 34 investment banks in the region now are affiliated to our federation. Why I'm talking about those members, just to give you who is our federation and why we are here, why we are talking to you today. Sorry. Now, people are suffering or criticizing or trying to analyze recently or during the last 2 years since mid-2014, the reasons behind the lack of liquidity. It means the liquidity was very acceptable during 2012, 2013, 2014 on the Arab markets. And suddenly, starting the half of 2014, this liquidity dropped, which means we have less transactions on the Arab exchanges. Now, as cultural diplomacy, when we talk about culture, when we talk about the ideas that we have behind all our actions. So we have to think why a certain liquidity can drop so sharply from a period to another. To talk about it, let me explain to you what is the market, how the market evolves. We'll play a little bit. What is the cycle for a market? A market can go up, it can go down, it can consolidate. What does it mean? This is a market. The price can go up, then correction, then consolidate. Look at it. Up, correction, consolidating. Yes, this is a way to understand the market. This is the market. If we go in the technical analysis in the market, you know that we use this to start the technical analysis. Okay, we will not go through it, but I'll tell you how I study the market through technical analysis. When it's going up, we start studying the momentum of the move. Arriving here, the momentum starts fading, start becoming negative, and now start going down. And then it starts consolidating, until it comes down. Then we will have another move. So this is what we have to understand first, the cycle. During a cycle, what are the phases of a market? You know, I might not go through the PowerPoint. It will be too technical for you. Today, I received an email saying that it will be several newspapers will publish it next week in the Arab world. They will discuss it technically. It will be boring for you. Let's talk with this. So they start thinking and giving explanation on the TV. Normally, every two months, I'm like 1 hour on CNBC in the Arab region. They ask me questions about the market. Meanwhile, they are receiving people, analysts, asking them, why you think we are having this lack of liquidity these days? Okay. Some of them, they will tell them, because we are approaching Ramadan, the fasting period. So people during Ramadan will not be that active in doing transactions on the market. Other people will tell them, we are approaching the summertime. It's a vacation, you know. But when it arrives during the spring, during the winter, okay, we have no Ramadan, no summer. They have to find an answer. So it's because of the European crisis, financial crisis. Okay? But before that, the Chinese crisis. Okay? Okay, all those excuses are legitimate, but it's not enough for me. Why? I told you through this study. During 2012, 2013, until the half of 2014, we had a lot of liquidity on our market, even during Ramadan, even during the summer, even during all crises that we've had in the region, even during the war in Syria, in Yemen, and the geopolitical situation in the region, we had enough liquidity. Why not now? We can explain it through this. During the uptrend, if you have $100, you can buy with $100. Okay? You will inject this liquidity in the market. If you want to buy more, you might go to your bank or to your financial institution, and this financial institution will tell you, listen, if you block those $100 shares, I can give you more, 100 more or 200 more. So this is what we call the leverage. You know what's the leverage? Buying with leverage? It means you have $100, you will buy with $200. Just because with the first $100, you will put your shares here at the bank, and the bank will tell you, okay, I will keep my hand on those shares. I will give you more $100. If you lose your money, I will take your shares, so I'm guaranteed. If not, okay, you will gain. So we have enough liquidity because the banking sector is giving to the market the tools to have more liquidity. What about when the market is falling down? So if you already bought, what to do? If you bought during the uptrend, I mean here, before arriving here, you might think I will realize my profit and I go out from the market. The problem is when you bought on the peak of the market, you are prisoner of your position. Why? You, cultural diplomacy and psychology of the trader, of the investor. No one would like to realize his losses. No one likes to lose, or accept his losses. So everyone, or most of them, they will think, I will keep my investment. I don't want to sell with losses. It will go up again, but it will go down. And it will go down, and he will feel prisoner of his position. You know the difference between short-term traders and the long-term investors. Long-term investor who will buy and keep this investment 3, 5 years, 10 years. The trader, he might trade several times a day. He might trade during 2 days, 3 days, or 1 week. Psychologically, we think during this correction period that the traders and short-term traders, they become a long-term investors. Why? They don't want to lose. So what is their excuse? You know, even if the market is falling down now, I know that it will go up again. And in fact, I'm a long-term investor, and I want to keep those shares to my children after me. Last week, he was trading, and he was telling me, hey, listen, every time I get some profits, I grab those losses, I buy again at a lower price, and then I sell up several times a day. Suddenly, he's becoming a long-term investor. This is psychologically in the market. You will face it if you are on the market. So let's go back why we don't have, during the drop, the liquidity. So people are prisoners of their investment. So there are no transactions. No one would like to make any transactions. Also, for those that would like to invest, they don't have money because they already invested their money. Banks will not give them more money, lend them more money because already they are losing money. They will even ask them to sell their position to cover because they are losing, and the banks are afraid of seeing those customers losing their money and not being able to repay the loan. So finally, everyone is prisoner. Same thing during the consolidation. During the consolidation, this is, I said, up, correction, consolidation. This is where the market will do several bounces until it comes down. Also, during this period, we don't have enough liquidity. What can bring the liquidity during those two phases? This is what we are calling the shorting. You know what's shorting? No. Okay. And this is why we can make the link with the culture in the Arab region. Shorting is selling what you don't own. Selling what you don't own. I don't own this ball. But I see that the price of this ball will go down. How can I act on the market if I don't have the ball to sell it? So I will watch. I will keep watching other people having this ball, but They don't want to sell it with losses. So also they will keep watching the market, and we will have no liquidity. Selling a ball without having it is going to someone who has a ball. He bought it for 10 years. He doesn't want to trade now. I go to him. I tell him, can you lend me? Can I borrow your ball? I can borrow it today. I will give it back to you in 1 month. Is it okay? He said, okay. Okay, when I take it for 1 month, I will give you a certain interest rate on it. He gave me the ball. I go to the market, and I sell the ball in the market. Why? Because my expectations tell me that in a month, the price will be here. What will I do then? I sold here. In a month, I go, I will buy it here. I realize the difference in my pocket. There's plenty here. And, sir, this is your ball. This is shorting. Okay. Why we don't have it in the Arab region? Sorry. Yes.
What about the people he sold the ball to?
The one who bought the ball, he lost. I gained. I sold here and I bought back here. He bought here and he lost this difference. This is a market. Someone might gain, other might lose. So this is a game. In fact, it is a game. Finally, why don't we have it in the Arab region? Because it's against the culture. This is the link. You can make it with the culture for you. In the Arab region, you know, most of the Arab region is Muslim. In Islam, you cannot sell what you don't own. It's against the Sharia. This is why during those periods, we cannot have the shorting. And this is why we cannot have the liquidity. And I invite all those analysts on TV, on newspapers, on, I don't know, several articles analyzing and giving other reasons for the lack of liquidity. Don't look where you shouldn't look. Look just about the shorting. As long as you don't have the shorting, you will not have liquidity during the phase of correction and consolidation. Mind you, all studies proved statistically that the market spent the third of its time during an uptrend or during a trend, and 2/3 during correction and consolidation. So it means we will stay without liquidity through lack of shorting during 2/3 of the cycle. Staying during 2/3 of the cycle with lack of liquidity and trying to find excuses, this is not the right way to see it. How to solve this problem? In fact, several efforts are made now. And while my friend Rashid is back, he's one of the people making those efforts to find a way to apply and to implement the shorting in the Arab region. There are several ways, and I always tell people in the Arab world, you are the ones who created the Islamic instruments by murabaha, by ijara, and all other instruments. There are instruments that at the beginning they were against the Sharia, but you found the solution. Why you've put all those effort and you were so creative and so successful in the banking system by creating those banking and financial instruments, and why you are so lazy to find the solution for the shorting. And now we are start seeing several efforts, and through all what my discussions, either with Rashid or with other markets like Saudi Arabia or Dubai or Qatar, they are trying to find a solution. And I personally expect during the next 2 years that the region will find the solution and we will have the solution. And the solution, in fact, is so easy. You cannot sell what you don't own. Great. Borrow it. Once you borrow something, you own it. Now you can sell it. This is one of the solutions that, in fact, I don't want to go in the Sharia techniques, but in the Sharia, as I said, you cannot sell what you cannot deliver, what you cannot give. But as long as you can deliver later, why not? So several studies, I'm not expert at all, and Rashid knows that I'm not expert at all in Sharia, but discussing with several specialists in this field, and lately I've attended a workshop on this in Egypt, they are finding such solutions, and I hope that soon, during the next 2 years, we will find really good ways to, like we found it for the banking system, we will find it for the exchanges. I will not talk longer than this on this matter. So I'm here now for any questions you want to ask me. If not, I can go and sit there.
No, please don't go, because the way, the lively way that you made your presentation attracted the attention of the audience. I'm sure that there may be questions. At least let's take one or two, if there are.
I'm ready.
And we'll let you go after that only. Are there questions? Because the subject was very lively. Yes. Shall I give?
Hello. It was a lovely speech. Yeah, this is Nermeen, from a student from the ICD.
Yes.
I had a question about the IPO. How do you assess the IPO before entering the market? And how do you assess the risk of the IPO? And could you perform a strategy on having a specific failing IPO to exit the market?
Okay. So the IPO itself, I'm not specialist of an IPO, but generally, to accept any IPO on any market, the specialist will study, first of all, how much this product or this company is attracting investors, first. Second, is there enough percentage of the capital of this company will be sold? Because sometimes, if you go and you say, I will sell 10% only of a small company, it doesn't interest anything. In 2018, you will have only 5% of Aramco. But Aramco means $1 billion. The 5% is $2 trillion, 100%. So it should be attractive also as a quantity, as a company, big company. But also, something very interesting which was behind the success or the unsuccessful IPOs. At which price you will offer this company, this share. If you overprice it, even if people are fooled by the numbers and they will buy, they will regret it and they will insult you during years. The successful IPOs, in fact, are those a little bit underpriced. If it was $100, we will offer it at $95. And then we will have a lot of investors interested in buying it, and they will boost it to 110, 120, and everyone will gain. But if you start with 120, you might have for 2-3 days 125, 130, then it will drop. Not only to 100, which is the fair price, it will drop to 70 because you fooled people. This is very important in the IPOs. I will leave other techniques for the specialists of the IPOs, but I think that I gave the main point of an IPO. They still have also, for example, the marketing. They have to market it. People have to know about this company enough. The brochure, they have to distribute it. Also, they have to have several investment banks to sell those and to market this product to their customers. Several other issues are also should be taken in consideration.
Thank you. I understand that the security market, the financial market, is a question of educated magician, the way you describe it. Otherwise, it wouldn't work, or you will always lose. If there is, I will take one more question here, perhaps.
Yeah. Yes, I have a question because, I was listening with a lot of attention your presentation, because in the last months, because I am a journalist, and when you are studying journalism, you are doing economy, but it's very brief. And in the last month, for example, some of the things you have said in this presentation is a clear example about what happened in 2008 in the crisis, especially when people were playing with money that it didn't exist. And when they lose it, that money and their own money. And the point is now the market always needs, you say, the money running. And now I will ask you, as you put the example of sorting, that is not allowed in the Islamic countries and so on, because you cannot sell what you don't own. And I will ask you, what do you think this phenomena is coming up in the last few years? Maybe it's for this need to have money running, that is like approaching the trading market, maybe to the more, let's say, normal society with some softwares that they are appearing of automatic trading, binary signals. Do you think this could be a risk? What do you think about this? If maybe it's going to be allowed in the Islamic countries, because this is a kind of weird system. Thank you.
Thank you for your question, because I'm a specialist in this. And I can talk hours about it, but I think I have 3-4 minutes. What you have as advertisement you receive on your Facebook every day, you are really hacked by such advertisement for online trading, especially for Forex online trading. This is very important to have maybe one complete session on this, just to clarify for people like you that this is the most dangerous thing you can ever do. They promise you, they told you, you just put $1,000, we will give you $100,000. And if the market goes up 1%, so you'll be doubling your money. 1% of 100,000 is 1,000. You've put 1,000, it's 100% profit for you. Okay? They forgot to tell you, if the market goes 1% down, you lose everything. Do you know with the currencies what can happen in one day, in 1 hour? So, this is first thing. Second, the success in trading on any market is, if you take any leverage, you should be able to hold this leverage. I'll tell you what does it mean. $100,000, it's like putting 100 kilos on my shoulders. Okay, I've done bodybuilding, I was trainer, I had some success, but finally, I can hold it how long? The $100,000 leverage is for very short day traders to trade during a few minutes and go out. But I will not be able to hold those 100 kilos during all the day or during 10 meters. I will fall down. And where will be the most difficult sensation or disappointment you will have is when you've bought, let's say, yen against dollar. You bought the yen, or let's take it easier, it's euro, you have euro, British pound. I've bought the British pound, and I borrowed $100,000 with the leverage. It went down 1%. So what will the online trading do for you? They will close the account immediately, or they will close the position immediately. You will realize your $1,000 losses. You will stay aside and think about what will happen. The market will go up 5%. With your $100,000, you would have realized $5,000. You know, 500%. If I would have only been able to keep my position. No, you cannot, because you are holding more than you can hold. Because what we call on the technical analysis, on any money management, the drawdown. What is a drawdown? The market can go like this and then go up. The drawdown is how long I can maintain my losing position before going up. How many people they bought here, and the market went here, and they lost their money. Why? Because meanwhile the market did this and then went up. With a high leverage, you will lose. And all online trading offers you a lot of high leverage, and you will not be interested with low leverage or just trading with $1,000. Why? Because the exchange market, the Forex market, is not like the stocks, the equities. The exchange market might move 0.5% per day. So for you traders, you want to become millionaire. It's not enough. You know, while the stock market can move 5%, any stock can move 5% per day. Okay, so you already opened this account having in mind that what they told you, what did they write in the advertisement, how to become millionaire, isn't it? I will tell you how someone can become millionaire through online trading. Yes, if you are a billionaire, you will become millionaire. That's it. Okay, thank you.
Thank you very much. Actually, we have already run out our time, but the way you explain things is so attractive that I wouldn't resist the temptation of giving the floor to another person who is going to me. Okay, so you don't want to become a millionaire. In this case, I would like to thank Mr. Khalaf once again, and both with Mr. Balushi and yourself, you opened our minds. Now you can count us that all of them will become millionaire one day. Okay. Thank you very much.
Thank you.